Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A combined bearish engulfing pattern and bearish closing black mirror bozo yesterday, which wasn't the hardest thing to achieve really, as the previous session was an indecisive doji cross. Though penetrated, the market was still capped once again by the combination of the February 2012 high at 83.50 and the lesser Fibonacci line at 83.70. The September 2012 high at 84.24 was also influencing the top of the market, though it was not directly tested. Meanwhile, the support below was still the January 2021 high at 82.39. I feel obliged now to point out again the real feature of last week, the weekly key reversal down. This is a significant pattern given that last week saw the highest high since late June. The creation of this pattern I suspect is due to one reason: the declining long moving average overhead, currently at 85.35, impacting the top of the market. Below the January 2021 high we have congestion at 81.77 and then the lesser Fibonacci line at 80.16. It is that level that saw some congestion build up in mid-November between 79.80 to 80.47. Plus we have the rising short medium moving average currently at 79.84 moving in there as well. In the big picture, the market is still within the mid-July to late August based bull channel, currently 7600 to 82.39. Interesting, last week's weekly key reversal down offsets the weekly key reversal up seen here 3 weeks ago. So far today, well, a slightly higher open, but an immediate attempt lower, penetrating the January 2021 high at 82.39, but failing to reach the next support at the 81.77 congestion before moving back up through yesterday's close and up to test the old combination of the February 2021 high at 83.50 and the lesser Fibonacci line at 83.70. The market has currently halted this attempt higher, well, resting I suppose, just under the 83.50 area. LME 3-month aluminium. An unusual bearish engulfing pattern. Now, the engulfing pattern itself wasn't the hardest thing to conceive, as the previous session was an indecisive spinning top. But the bearish engulfing pattern was planted on top of a prior bearish action, thus in theory making it a fourth bearish black crow as well. It was nevertheless a somewhat cautious move lower, as prices seemed very spooked by the support immediately below. Now this consisted of the June 2018 high at 23.53, the flatlining short medium moving average currently 23.55, flatlining medium moving average currently 23.42, and the lesser Fibonacci line at 23.45. Below all of these we have some free air until the October 2018 high at 22.67. Meanwhile overhead, well, there is some congestion at 24.41 and 25.08, the latter being a bit stronger, but you'd have to see a rise up to the congestion that starts at 25.63 and stretches up to the 26.75 area to see something significant. Now within this overhead band of congestion is the declining long moving average, currently at 26.11, which makes the opportunity for the market to reach target X1 at 26.52 the harder to reach secondary target for the late August, early November diamond bottom pattern, and something we've been harping on for quite a while now. Well, it makes it just that much harder to reach. So far today, a seeming rejection of the congestion zone below and a move up. We're in fairly free air overhead now, up to the congestion at 24.41, which isn't that great again, as the better stuff is at 25.08. We're currently looking at an immediate countering bullish engulfing pattern, but only just. Thank you for listening. The short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.